All right. Welcome to all the viewers. I hope each of you is doing well. Thank you for joining this LinkedIn Live on a Tuesday afternoon. And I can tell you it's a very warm one that I am facing in Hyderabad. I think VLK is also from Hyderabad, and Vignesh and Ramaswamy joining from Chennai. Of course, a very warm welcome to each of you as well, our guests for today's panel. Before I have you introduce yourselves, I want to set some context for today's discussion. So we are living definitely in a very interesting era, aren't we all? On one side, we see that is rapid advances. There are rapid advances in innovation, and when I say innovation, one of the first things that comes to our mind today is about generative AI, and generative AI has brought artificial intelligence much closer to the non-coding community. And in many ways, this is a disruption of sorts, and also has propelled some of the leading companies to strengthen their competitive advantage. They find themselves a threat. Now, while on the other side, we see there are strong geopolitical undertones, and these are emanating from beyond our borders, and they have an impact, obviously. Then there are aspects related to the overall macroeconomic environment, and for a lack of a better word, I can say it is dicey. And for the viewers that are tuned in and listening to this and following all these developments, it's quite fascinating to be living amidst all of this. In today's session, uh, I think we would want to talk about these factors, external factors that are playing into our decisions, and more so in the context of startup investments. It's important to understand the views that we have from our guests, and I wanted to make sure that we have these people that have joined today to speak about their own experiences, and there are different questions that we will cover today. But before that, my name is Praveen Mukapati, and I'll be your host for the session. The session is brought to you by the Telangana AI Mission, which is a center of excellence for artificial intelligence that was instituted by the government of Telangana. This is powered by NASCOM, by the way, and Telangana AI Mission works on various initiatives. We look at enhancing AI adoption in the public sector and also in the industry. We help AI startups scale and grow through various interventions, and the programs, various other programs to encourage innovation from the academic community. But also, we realize that there is a skill gap, a demand supply gap in terms of the talent, and we drive interventions in order to be able to support that. Additionally, we engage with various stakeholder constituents periodically through sessions like this. In the past, we have done these sessions in a closed door format, but we realize there's a lot of wealth of information and knowledge that is being shared in these sessions, and we said we would want to open it up. And this LinkedIn Live is first of its kind, and we hope to do more of these. So, with that context, I'm definitely very thrilled to have my panelists along with me today. Once again, welcome VLK, Vignesh, and Ramaswamy. Thank you for joining. And for the benefit of our viewers, I would request each of you to introduce yourselves. Each of you can take about a minute or two, and you can do this in the following order. Vignesh, you first, followed by Ramaswamy, and then VLK.
Okay, thanks, Praveen. Thanks for having us over, me and the Nathan at NBC. So, to speak about what we do at A99 is we are a pre-Series A venture capital fund. Uh, we think there is significant scope for pre-Series A investing in India, and our mission and our theme and our thesis is all tied to India. We believe that this century is the Indian growth century. It is not the next 10 years or next 20 years. This entire century is the Indian growth century. And we see significant traction across segments. So we are a sector agnostic VC. We look largely for India-based ideas which either have a digital underlying or a core innovation in its center. Uh, Life's been good so far. This is our second fund. The first fund was more like a micro VC. This is our second fund. We are a $15 million fund as of now, and we have made two investments, both in interesting space, and we are looking to do more. So that's the brief on Atha 99.
Thank you, Vignesh. Ramaswamy.
Yeah, thank you, Praveen, for hosting this and doing this session and having me and the Chennai Angels on the show. So I represent the Chennai Angels. I run the office of PCA. Chennai Angels was formed as an angel investment group towards the end of the first decade, around 2008 2009, by founders who had built large businesses through the 90s and early 2000s. As a thesis, so therefore, as a thesis, one of our mottos is to help founders build their business in addition to funding the business. As an angel network, we have through the past 11, 12 years invested in over 80 companies, 85 companies with current active portfolio of about 55 companies, I would say, across various sectors. And as Vignesh mentioned, we look for a core, we also look for a core differentiated business model, ideally backed by and powered by technology, not necessarily powered by tech, but if there is underlying good technology, that always helps. But we look for sound business fundamentals that way, that can lead to a sound, strong business, profitable business down the road, right? And as a thesis for investment, we look at early stage companies that have an established product market fit with early paying customers, Indian based companies as well. Some revenue should be generated, and that's what we look for. Yeah. What we do not do is we do not fund typically uh, product development, MVP, pre-MVP type of companies. In that stage, we don't fund. We come in a little later when there's early revenue.
Thanks, Ramaswamy. VLK?
Yeah. Hey, thanks, Praveen. Thanks for hosting us out here. Pleasure to be on the panel with Vignesh and Ramaswamy. So, um, my name is Lakshmikant. Everybody calls me VLK. I represent Pavestone out here. Pavestone is a 700 crore fund, primarily focusing on enterprise or startups that solve difficult problems for an enterprise and sell to a mid to large scale enterprises. So 70% of our portfolio gets allocated to that. 30% of the portfolio gets allocated to what we call as frontier technologies. So our thesis is that companies which have a product market fit established, which have about a million in revenue, we fund them to the tune of anything between $5 to $8 million. Frontier technology, things like space, blockchain, etc., we fund to the tune of about $2 million. As of now, we did our first close last March. We will be doing our first close in the next couple of months. We've invested in three companies. One is a cognitive AI platform company. One is a space tech company. One is a company in the drone space. Also given term sheets for two more. So excited to be here. I want to learn from the other panelists, and also I think we should make this interactive. And if the floor asks many questions, it'll really make it very worthwhile. So, thanks, bro.
Thank you, VLK, and thank you all of y'all for those introductions. And for the viewers that are tuned in, last I checked, about 35 people were connected. For y'all, please use the opportunity to ask questions at any point during the discussion. And like VLK was suggesting, if you want it to be interactive, I'm sure, we can take a pause, in between the discussion points to have your questions answered. So yeah, we are set, I guess, and let's dive into the topics that I wanted to discuss in today's session. So last year we started talking about funding winter, and this year we are talking about a prolonged funding winter in many ways. And investment into Indian startups has been down about 75% in the previous quarter, the first quarter of 23. And a number of these funding rounds, either early stage, late stage funding, everything is down anywhere between 60 to 70 or maybe even 80% when you look at on a year-on-year basis. So considering this, a couple of questions to my panel. When do you think, or is there a light at the end of the day? Startup founders are wondering and asking this question. So keeping that in mind, when do you think this winter will end? And the other question which I also want you to answer is, in the context of your own portfolio companies, what strategies are you looking at implementing, or are you implementing, especially in terms of having them navigate this funding winter in a meaningful and easy manner? And what sort of support are you providing? So to respond, first I'd like to call upon VLK, and Vignesh and Ramaswamy in that order.
Thanks, Praveen. I think, this funding winter topic has been, I guess, talked to death by everybody. So I want to give it a slightly different perspective. If you look at it from essentially two lenses, right? One is an investor lens, people who invest into funds, and one is from the investee companies. I think from an investor perspective, I would say that people, especially people in our space, that is who want to invest in, enterprise technology, are typically more mature investors, which is people who have seen business cycles. So in that sense, that people who have seen multiple business cycles know that there are ups and downs, there are recessions, and you come out of it, there's growth, etc. So what we're seeing is people there are still optimistic about investing into the VCs. Only thing is the conversations are taking much longer than what they would. I mean, if you close a deal in 4, now it's probably 6 to 8. So we haven't seen there is, I would say that there is friction, but not some friction from a fundraise perspective that is stopping us. So that's one part. Coming to the companies, from a Pavestone perspective, we typically invest in companies which are almost profitable or close to being profitable. So in that sense, that a lot of these companies are not really in the cash crunch mode where they need to really manage on a quarter by quarter basis. So in that sense, that we are seeing the companies able to manage their business, but at the same time, people are conserving cash. So they are definitely being what mindful of what extra spends they could do. Investors are also being mindful of what they fund from a perspective. Secondly, we are also seeing, apart from the funding winter, lot of news today about compliance, which is about risk and compliance, right? So in that sense, investors are also having a second or a third eye from a compliance perspective as to what's happening. So I would say while funding winter is one part of it, I think compliance is also another part of it, which is kind of slowing things down. But that said, if you ask me, our pipeline still remains fairly strong. We are seeing companies that we can fund, and they are not in an immediate need for funds. So I'm slightly more optimistic on this, Praveen, than probably most of us.
All right. Thanks for sharing that. And compliance bit is something which I'm glad you brought it out. I want to understand, Vignesh and Ramaswamy, how are you seeing this, and if you have a view on it?
So it's always a difficult thing to follow VLK because he hits the nail most times on the head. So so having I agree with him. So see, from an investor perspective, if you see largely, right, there is significant interest in investing into India. So I'm saying my LPs are happy bringing money into India, and AIF, if you see, is one of the most significant asset class today in India in terms of traction. There's a lot of interest in putting money in AIF. So I think investors are happy to give you the money, provided, like VLK said, that compliance is something that you ensure in your companies before you put in the money or while you're invested with them. Okay, so and they off late from, if you see my earlier in the early 2022 kind of pitches that I used to do to LPs, it was more about pipeline, how quickly you close a deal, what is the kind of timelines we look at exit. Now, when you go, the differentiation is there. Like VLK said, how do you run this process? How do you ensure? So they are okay with the sustained process as long as you have you do your homework. That is one thing. And largely where I invest in terms of pre-series A or series A, right? I don't really see a large funding winter. Good businesses with traction and which have a product market fit always attract money. I don't see a big see. If you look at the data, largely pre-series A and prior or series A and prior, the fall is not so significant. Yes, there is a fall, but it's not as significant as it has been at series B and series C levels. Okay. So if you look at it from an investee company, where we are investing from the company perspective, the valuations are getting manageable and reasonable, I should say. They are not still sitting on their high horses. They understand that pandemic is almost done. People are not writing checks from their bedrooms anymore. So, that is sort of sunk in, and people are getting reasonable with their valuations. You asked the question about how our portfolio companies are managing, right? So, see, we as a at my firm, and what we say is more from less from for more from less for more. We look at accentuating or opening more gates to them where they really don't need to go and raise money to take care of their burn. stuff like that. And we run workshops. In the sense, we had recently had a chat with a couple of founders where we said, you tell us you want to put fleet on street to get sales. Can we open doors for you at a senior level, which will help you? Will it help you faster? So stuff like that. What resources they have, how are they accentuating it better is something that we stretch out. But to VLK's point, I'm also pretty optimistic about the scenario that is currently evolving. It's not
All
doomsday
right.
as well.
It's not doomsday. Okay, I hear you. Ramaswamy, is it doomsday or there is light at the end of today's call?
Yeah, I mean, that's what we all hope for. How far out it is unclear to me. Two experts have given their thoughts on the extent of the funding matter, but what I to answer the question that you had, I want to talk about the structurally the Chennai Angels, we have a role called the investment director that represents all the investors from the Chennai Angels to the startup. Oftentimes, he or she takes a director position in the company and works closely with the founders on building the business. This may be GTM advice, various types of advice, or giving business connects through the membership of the TCA, right? That would be otherwise difficult to get. Structurally, we do that. We have this investment director role to advise the company. And number two, as a part of the members, we also members of TCA. We also have VC firms, institutional. We have something called institutional membership, where we invite selected VCs to be a member of the TCA. The investment director works with such members and creates conversations with these startups on how to prepare better for a subsequent round of funding. What will be the lens through which a VC will look for as for a pre-series A or a Series A investment, so that the startup starts preparing 6 months, 8 months upfront before its cash it runs out of cash. So through these mechanisms, we obviously look at to support the portfolio companies. Obviously, look at cash very, very closely. What can be postponed or deferred? What would be capital efficient ways of growing? What can be avoided, etc., and invest in necessary things to grow in a more grow more for lesser spend, right? As one of the other speakers was saying. But that's how we are set up to support a company. Of course, if there is a bridge round we need to do, we are always there to sort of consider it and extend the runway as well.
All right. So clearly it's not all doomsday. We hope not. Vignesh, you talked about. I think VLK was also alluding to it in some ways. The decision making time has increased in terms of funding, from your perspective, and there's a lot of due diligence that is happening. You're looking at the fundamentals much more closely than you were there. Perhaps you were doing before. Maybe you were looking at the fundamentals closely even before, but it's just about the fact that all of this is consuming perhaps a little more time than what it was before. So it's more like 6 to 8 months for a decision to happen. Now, in the context of even the ROI, from your LPs or from, at least in Ramaswamy's case, in the Angel Network's case, the institutional members or individual members are looking at generating a return on their investment. Now, there was a term that I came across recently, which is basically called patient capital. You will know about it, at least the audience may not have heard about it. So, for those, I would sort of explain. It's nothing but long-term investments where investors are, let's say, more prepared to wait for a considerable amount of time before any meaningful return on investment is realized. And for this reason, uh, typical fund managers tend to employ a patient capital strategy, even if there are short-term losses that they see, but they remain invested. And this is a theory. This is something which is now, some funds are increasingly getting into it, thinking about it, talking about it. I want to know if you have any perspective on it. Do you subscribe to this theory, or you don't, or is it organic that you should subscribe? Just wanted to understand, your take on it. Ramaswamy, let's start with you this time.
Yeah, sure. I think a business, if it is has sound fundamentals, intrinsically sound fundamentals, it is set up to grow in a certain pace, right? And external conditions can augment that pace of growth. Capital can augment that pace of growth significantly, or if external conditions can also deter that pace of growth. So more fundamentally, I would say, as I said earlier, we look for sound business fundamentals that and ensure that through our mechanisms we have, the business is being built on the right foundations, right? Having said that, we do that we do expect certain, our angel investors expect certain form of return in a 5 year to 6 year period, at least an option to have a exit, right? But at the same time, in many cases, we have portfolio companies where people have held on to the investments beyond, even beyond when exit offer was offered or was provided, because they believe in a longer term sort of gains, longer term track of the business as well. So I guess there is, and then we also have certain types of businesses that are sort of impact in nature, that are not necessarily pure opex, that inquire in capacity building, that require um, uh, going to different cities and reinitiating thing. It's not one of those things where you're an um, online offering, then you can put marketing money and quickly ramp up customers. It's not one of those things. So we have a lot of those businesses as well that are good businesses, but need time to sort of get to scale, right? Many climate techs, climate based companies are often like that. Agri tech companies are often like that, that you need to give it time. It will be good fundamentals. It will generate, it will have sound unit economics, but you have to give it time to grow. Therefore, we have a combination of both, horses for courses. But I think going back to what I said, uh, for sound business fundamentals is what we look for. The intrinsic business fundamentals, and the external environment can augment it or uh, reverse the trends, right?
All right. Noted. Thanks for sharing those thoughts, Ramaswamy. Vignesh, you want to take a
Yeah.
stab at that?
So as an AI, when we were set up, right? So we took a investment time period of almost 8 years, extendable by another 2 years. So 10 years is what is our overall fund life, right? So in that, I think if you directionally decide to go with, let's say, a deep tech investment, like to Ramaswamy's point, a deep tech investment, or something that is is going to take some time to sustain itself before it starts generating cash flow, you will have to go from the beginning that this is patient capital. You have to see it through. So I think like they say, when you're doing an M&A, you better have your integration strategy written up front. So I think the same logic applies here. When you're going into a company, you should have this, the long form already. Is this a patient capital? Is this, what is the kind of business you're going in, and how long are you willing to be patient? That has to be sort of, you're signing off on that. Okay. Having said that, certain business cycles may make a business go from a rapid growth to a very patient kind of expectation for investors. For example, we have one in our portfolio company which is doing very well during pandemic, as it was catering to the Shopify ecosystem, and they raised Series A pretty quickly, pretty like 1.5 years from the time we invested, right? Post this, considering the business environment in the US and the cycles that they're going. So now it has become patient capital for us, because we see the company still has got potential. The business traction is not as much as it was during a pandemic, or for whatever reasons US is not doing too well. Shopify is kind of doing its own stuff to get it to version 2.0. So that it becomes patient capital. So as long as you are in it for a specific period, and you are not looking for some rapid hits, this is not a 2020 game. So I think all of us will have the patient capital mindset somewhere in the back of our head. I think that's a given.
All right. And so I'm sort of assuming that you are subscribing into, or rather you're soliciting LPs based on that strategy. Obviously, you
100%.
want to have
So
them.
I upfront tell
Yeah.
them this is a 8 year to 10 year fund. This is how we are going to sort of take it. So we are not going to. It's not speculation. So that has to be told. It's not speculation where I invest today and expect a churn tomorrow. That's not going to happen.
Understood. VLK, you want to add anything to that?
No, I think both the panelists have covered it, I think, excellently. Not much to add. I agree totally with Vignesh. It's about setting expectation upfront, right? See, end of the day, it's not a day trading strategy. You're telling them that, boss, it's a 8 plus 1 plus 1. Okay, so moment they know it, you draw on that kind of investors. So it's very important to set that expectation right upfront. So, and if you do that, you don't have that kind of pressure. So that's the key. More importantly, I think while we're talking about patient capital from an investor perspective, I also think as a fund manager, the way you deploy capital is also important, right? Obviously there is this, shotgun strategy, and there is a more, you could rifle shot may not be the right thing, but a more, rifle shortish kind of a strategy. So think of this way, right? If you look at a fund cycle, first 3 years is, identifying and deployment of capital. Then, next 3 years is essentially building the company, and the last 2 3 years is exit. If you at a high level, right? Now, if your strategy is that I'm going to invest in 100 companies in 3 years, you are writing check every week, yeah. So if you're writing check every week, the diligence that you do will be only so much. Okay, so very important that you look at it from the fund perspective also, that your strategy should be appropriate, so that you do the diligence appropriately. And more importantly, I think you should have diversity of thinking in making a decision. So, see, one of the reasons why decisions don't go right, because there's lack of diversity of thought in the decision. And then what essentially happens is there's some sameness about everybody's strategy. Everybody is like, I'll invest in 20, one will, click. Okay. Question is, can you invest in 12 and make, two click and four be okay and still manage, right? So that's what we are trying to do. But let's see how, end of the day, we'll know this results only 10 years later, right? Only thing we know is the entry price. After that, everything is Excel sheet.
Absolutely. Thanks, VLK, for chiming in. At this moment, I want to acknowledge the viewers that are connected to this session, and I want to definitely take up questions. There are some that have already come. I have Ruchi Agarwal Singh, who has a question specific to Ramaswamy and to Chennai Angels. And the question is, what sort of investment benchmarks do you normally use for an early stage startup? I mean, it's a generic question, but if you can summarize, the benchmarks that you look at, Ramaswamy.
The voice is very bad at my end. I'm not able to hear. I don't know whether my voice is coming through clearly.
It's coming clearly, Ramaswamy. I don't know if it's
Yeah, can you
speakerphone or
please
your mic.
repeat that question?
Yeah,
I'm
if
hearing it from the
yeah, so
back.
the question, yeah, so Ruchi has asked you a question specifically to Chennai Angels about the investment benchmarks that you consider for an early stage startup.
Yeah, thanks, Ruchi, for the question. So basically, we our uh, investment criteria are as follows, right? We look at a few lakhs to a few crores of revenue, few over the last several months. That means paid customers, established product market fit, right? That the company has valuations typically under 50 crores, and we invest anywhere between 1 crore to up to 4 crores of money, right? Would like to take between 10 to 20% of the company. Yeah.
Okay. Hope, Ruchi, that answers your question.
Hope
Let
that
us know
answers
if
your
you have
question.
anything else to. Yeah, please let us know. We have another question coming in from Karthik from a startup called Genzers. Karthik asks, when looking at funding AI use cases, what are some of the use cases that are exciting for investors? And in specific, you all can talk about it. He says that AI is such an ocean in itself and generic in nature. In other words, what are the most important factors that you consider when evaluating investment into an AI startup? Vignesh, you want to take a stab at that, responding to that?
So I will split the question into two. The first aspect is what are the use cases, and the second aspect is what would interest us to invest. Is my understanding correct?
That's right. Yeah.
So, okay, so at the at the expense of sounding really dumb, let me tell you, as of today, when it comes to generative AI, we are still exploring. We are not so sure, or especially where we are going, as to how this is going to pan out completely. Okay, if you look
Vignesh,
at,
sorry.
yeah,
So if the understanding is not about the question was not about generative AI. It's more at AI, generic AI use
okay.
cases.
Generic. See, I'll tell you one thing. We have invested. I can give an example of what we have done. We have invested in a AI and hyper automation combo company, which is now sort of sort of breaking new ground with segments like manufacturing and hospitality. So where AI is able to generate positive business results, okay, or where it is actually practically made useful in most companies, irrespective of use case, will be of interest for us. Okay, the use case can come from any segment or in any form. As long as you're using it to create a positive spin or basically disrupting the underlying, you'd be interested in sort of taking a look at that opportunity. And the second aspect was, sorry, just to understand again, what was the second aspect that you wanted to speak about?
The factors that you consider most important while you evaluate investments in AI companies.
Do you have traction with customers? And it's a basic for any business, but especially for AI, because what you see as a use case, as a customer also responding to it, is something that we definitely look at. And across the board, is there a moat that you're building along with this AI, that the underlying being AI? Because it is today, AI is open source. For example, Chat GPT is available for everybody, right? GPT-4, GPT-5 is available for everybody. GPT-3, GPT-4. So how are you building a moat by utilizing it? Is something that we would look at. And largely, as I said, we are still in a discovery phase. We're still looking what can happen.
All right, thanks, Vignesh. Hopefully that answered your question, Karthik. As one more question, VLK, maybe you can take that. This is from Prateek, who comes from a startup called Untype. Untype is also one of the startups that we are supporting under the Telangana emission. So Prateek asks, he says AI is a long-term investment, which truly is. Some of the capabilities take time for themselves, for that to get built and eventually get rolled out to their clients. And he says it involves a lot of experimentation, a lot of R&D, and in the short term, the kind of results, and Vignesh, you talked about results, traction, and all that, it might not really be great in the short term. So he's asking, do investors or VC firms think differently about this when it comes to deep tech, and how do they evaluate specifically? Again, Vignesh, you talked about it, but VLK, you may want to touch upon how you perceive this entire journey that these startup founders go through when it comes to building tech, and how do you really assess when is the right time for you all to come in?
I mean, I think it's a great question, but see, if you look at it, I think Vignesh touched upon it. See, end of the day, you have to solve a business problem. If you're not solving a business problem and providing value, really doesn't matter. I mean, you could just do plain, data entry and solve a business problem. You will still make your big company successful. So we need to be very careful as to how we lead the conversation. Okay, so there are two kinds of companies in this space. If you really want to think of it, right? One kind of company is which uses AI to make a differentiation to business. Okay, and if you think of AI is end of the day a learning machine, which is there are learning models, and the whether it is LLM, whatever you want to call it really doesn't matter. Okay, so the underlying data that you have for using this learning is very very important. So the way I would look at companies is, what's the data moat that they have? Okay, how diverse is that data? See, a lot of us talked of responsible AI, ethical AI, etc. So question is, what's the quality of the data? How diverse it is? Okay, does it cut across many multiple use cases? Can it scale? So that's the way I would look at it from a data perspective. If the data is there, then the machine will automatically start to learn over a period of time. One. Secondly, there are certain AI use cases where you need perfection versus some AI use cases where you're okay even with 70% accuracy or 80% accuracy. I'm just giving an example. Let's say, for example, you want to do a heart surgery, whatever, right? You want it to be almost perfect. Okay, you can't afford a AI engine to give wrong number. But if it's something to do with your LinkedIn friend for the next thing, it's okay. Or if it's a miss or a hit. So the use cases drive the adoption of the model. So very very important for the founders to look at what business model they are solving and what accuracy is good enough for that particular piece of business. One. Second thing is, of late we are also starting to see companies which are building tools, which help you build better models, help you navigate the data better, faster algorithms, etc., etc. I think that's a much more tougher space to be, because if you think of it that way, right? End of the day, what in my opinion is going to happen is some of these tools you think of it as a product gap in what Microsoft offers or Amazon offers or whatever somebody offers. What typically happens in my experience is this gap gets filled very quickly. What you think of as an advantage today, 2 years later, it's not an advantage. So, so very important for them to figure out that what problem they are solving from a technology perspective, and there are not too many unique problems to be solved. Okay, so for example, today everybody is doing image processing. I mean, there are probably 150 startups. So you have to really choose your field carefully, and I would look at it as the diversity and sources of data and the ability of the model to scale. That's what I would look for.
Yeah, thanks, VLK. And you touched upon this bit about data and the diversity of data, and especially in the context of responsible AI. At NASCOM, we are placing a lot of emphasis on this particular charter, and it's important to sort of look at how the tech is being built, and is it adhering to these principles or these frameworks of sorts that we are requesting everybody into subscribing to such process. It's important that we do. Thanks for bringing that up, VLK. We've digressed, but I think it was good because we want to make sure that there is interaction happening with the audience. For those that have connected only recently, at least in the past 10-15 minutes, we sort of touching upon a bunch of different questions, and in between we realized that there's some questions from the audience, and hence we decided to take up those. So if there are questions from those other listeners that haven't asked a question and feel that there is something that's there on their mind, please feel free to ask. So let's
Praveen, if you
continue.
don't mind, if you don't mind, one piece of advice to the founders: always lead with the business problem that you're solving. Okay, that's very very important when you're doing a pitch. Okay, because if you don't do that, today every pitch is pitch perfect. Yeah, everybody has AI, everybody has today some GPT, some blockchain, some everything is in it. Okay, so if you have to cut the noise, you have to talk with the business problem.
Thanks
100%.
for Rush. Yeah. I'm glad that you mentioned it, VLK. Thank you. So there were also a few other questions I wanted to ask, and again, we've sort of I felt we talked about it, but there is obviously that sense of uncertainty with respect to funding, and some startup founders are really looking out for funds so that they can grow and scale, at least put money into R&D, marketing, whichever the reason might be. Any specific advice that you all have? Um, Again, in terms of their approach, VLK, you talked about it just recently, just before I asked this question, but then are there other things that they should be considering in terms of how they should go about this whole process? And there is obviously tightness in the market. Of course, capital for good businesses is always there, but for those that are still building, still in the trenches, some proof, some validation, but still not sufficient enough for most investors to come in. What should they be doing? Of course, it has to solve a business problem, no doubt. We talked about it, but then what would you advise if you were to recommend them, in some founder is sitting in front of you? What would your advice to them be? Vignesh, you want to start first?
See, in manufacturing, there is always, if you are not able to, if you're solving a problem, but you don't think you're 100% it is, go deeper. Okay, so that is something that is imbibed in most of us here also. So basically, if you are solving a problem, you have traction, but you are not sure, and there are other people doing similar stuff, which is the scenario generally today in most AI. You are doing this, this other person is doing something similar. Try to go deeper, try understanding the problem deeper, and maybe you will have a solution that really stands out. So that is something that works when you manufacture huge machinery. So maybe it will work for you when you're setting up a digital startup as well. Apart from that, if you ask me frankly, right, I would advise, maybe this is against the general trend, to wait and watch. Okay, there's this, every segment is getting disrupted as we speak, and they are getting disrupted again in the next week. Okay, someone disturbs something, the next week if you see someone has already disrupted it with solutions and others. So take a good look at what you're doing and wait and watch, and maybe you will get you even the someone who puts together two three things that are other startups have achieved, you'll be more successful. So these are two, I would say, go deeper and wait and watch what's happening in the space.
All right, Ramaswamy, I realize some audio issues that you're having. Just give us a thumbs up if you can listen to us clearly. Um, Not sure if that's the case, but VLK, do you want to add to what Vignesh has said? Any other advice?
So please correct me if I'm wrong as well.
No,
It's
no.
choppy. It's breaking.
Yeah. No, I think very aptly said. The way I would look at it is, you're a founder, right? Like I said, very clearly lead with the business. There's no two ways about it. Okay. See, one of the most important things you need to know where your company is in terms of evolution. Okay. Meaning, how do I want to say this? Sometimes everybody copies a model. Everybody says, if you look at the pitch, people will say, I want to do this. I need fund for building my product 5x. I want to sell it in 3 geographies. Okay, and this is what's going to happen. Okay, and I need money for hiring 4 sales guys. This and so that's not scale here. I mean, see what you have to understand. See, there's a great book called Crossing the Chasm, and I would urge potential entrepreneurs to read that. It talks of at various stages of the evolution of a company, the persona of the buyer changes. As you know, there's a theory of diffusion of innovation, right? Early adopters, the early majority, late majority, you know, the laggards, etc., etc. So you need to understand why people are buying at each stage. For example, you are a startup, you got a great idea. Some 5 guys will love it, they'll buy it. Okay, you want to sell to a slightly larger corporate, their buying decision is very different. It's all about mitigating risk, right? So when a persona of the buyer changes, your business model has to change accordingly. And so you need to understand those important questions and then put your business case accordingly. It's not about I will just add 50 people, I'll add this. It really doesn't work. I'll give a simple example. Let's say you are a SaaS startup, okay, and initially great. Okay, if I ask you what's your most important development metric, you will say time to market. Fantastic. Okay, let's say you got 100 customers. Okay, and you're starting to grow from that. Whatever 10 million to 100 million or whatever 1 million, 10 million. If I ask you what's the most important metric, you should not say time to market. It is time to market is important, but time to recovery is as important, because once you have 100 clients on your platform can't go down. Okay, so how do you rejig an organization around time to recovery is extremely important. Okay, so founders typically miss that when they make the proposal. They just say I need to add heads and resources and I need to do that. So if you can articulate a proposition very differently, you'll probably find funding easier. I don't know if I made
Yeah.
sense at all, but
You certainly did,
100%.
VLK. Yeah,
100%.
Vignesh, thanks for also sharing your views. Ramaswamy, I don't know if you were able to listen us through, and you still are able to listen to us. Let us know, and if you want to add anything further to that, please do. I think you can listen to us now. Yeah, okay.
Yes, yes. I think it is with the headphone. It's audio is clear now. Yeah.
Okay, yeah. The question was, it's from the audience if there was any particular advice that I mean, at least because of the various startup founders that are connected and those that might be listening in terms of the recording as well. If there's any advice that you would want to give in the context of today's uncertain funding climate, what would such an advice be? And VLK and Vignesh had shared the views. Not sure if you were able to hear through that, but love to hear your thoughts as well.
I couldn't hear through everything. It was came in patchy, but I mean, you have to focus on extending the runway and focus on necessary things and put away nice to have initiatives. Right, focus on the core, strengthen the core. Usually, when these cycles happen, you have to strengthen. You have to look inward and strengthen things so that when the cycle turns again, you are well set to take off. Right, and you ride the wave when things turn around. So that's what is required, I think. Right.
All right. Thanks, all of you, for sharing your thoughts on that. And Vignesh, you started to respond to that question, thinking that it was about generative AI, the previous one. I want to get into generative AI definitely. I want to, obviously, it's clear that there's a lot of excitement, a lot of like I was setting the context, a lot of non-coding community has now access to AI. and the power of AI through ChatGPT, Midjourney, bunch of different generative. I just don't want to limit it to large language models, but image, video, different kinds of content is getting generated using artificial intelligence, and in a completely no code format, right? And a very interactive way for the common person to start using it. Clearly, there is a lot of uptake. Also, there are certain downsides to it. We've been talking about as NASCOM the aspects surrounding ethical use of AI, responsible AI, and being understand and being cognizant of the fact that uh, there is appropriate use of tools like this, because you never know how inadvertently one's usage can cause harm, right? You got to be careful and cautious about how these tools are used. Now, in terms of innovations that you all are seeing, and needn't be generative AI companies that you are talking to, but I'm just saying as a space overall, you are witnessing this as an investor. How do you see this space to evolve? What do you think are some of the things that you will expect? I mean, some of you, I think Vignesh, I guess it was you were talking about integrations with Chat GPT, and startups starting to build moats around that. And what is so unique about their proposition, even though it is built on such a generative AI model, but how unique it is. So you're already talking about that, but I just wanted to go a little more deeper, if you will, and understand how you see the future, let's say the next 6 or 9 months to evolve, especially in the context of innovation, startup innovations, and how your decision making will be in terms of the investments that you'll be making. So I'll start with Ramaswamy first, and then Vignesh and VLK after that.
I mean, my few cents on the generative AI piece, right? I think one has to look at the cost of doing the computing as well, right? I think the cost has to be in long term, of maintaining the resources, putting all that computing power behind, has to be meaningful to and justify the use case for which it is being applied. So accordingly, various use cases may open up over time, right? So is my audio coming through?
Yes, yes, it is.
Sorry, I'm still having problems here.
All right, so we'll
Can I
take a
come back
break,
to?
and then
I'm
we'll come back to you, Ramaswamy.
still sorry about this. My audio is very
No,
weak.
no, that's okay. So, Ramaswamy, while we'll wait for you, I think he's touched upon something very interesting, right? The cost of compute, because it's also while maybe there's computational resources are now more freely available than they were a decade before. So, doesn't mean that you go about spending valuable resources into computation. How effectively, how optimized is your compute is something which we would definitely advocate. There's also this thing about green AI. How green is your development, and how optimal is your code? So that's something which is definitely important. But again, just switching back to the thing about generative AI, of course, there's high intensive computations that happen in terms of generating these. The cost of maintaining the Chat GPT for the wider public is humongous. We've been reading about the numbers, but that aside, I mean, in terms of the startup founders and the innovations that you see, Vignesh, you have any thoughts on that?
So I follow a lot of meme creators on AI in on Twitter. Okay, so I saw something that was very I thought was very relevant to what is happening. So they show a bunch of the large VCs running into a building which has a company's name saying Generative AI, and they show them putting money into it, and they cut to they say 6 months later. They draw an arrow and say 6 months later. Okay, they come to the place, the building is there, the board is not there. So the guy come in and ask, "Hey, I wanted to invest in this. What happened? Oh, they got disrupted by generative AI." So so that is the actual status that, if you ask me, is pretty fair. On touching upon computing power, right? Today there was an article on FT which says that they're going to put generative AI on mobile phones. There are companies who want to put it on mobile phones and make it as micro as possible for people to have fun with it, right? So I think the computation, the cost that is going to go down, and they're going to try to make it green. See, the infrastructure will always catch up. Okay, so that is not, if you ask me, a really a worry. The problem is, what are you doing with this? Okay, so we were looking at a couple of startups. One of them take text. See, if you see success where it has been made so far, it's in the text side, and on maybe I can say that it has come little bit into pictures and others. But if you see largely, right, this is still, we are still discovering as we go ahead. There are companies which are now taking it, like taking text and making videos out of it. Like, if you see, go to Times of India web page now, and below every article that you see, there's a video that is available. So they are using generative AI to announce it crisply to you. Okay, so it's a very nice to have. Like, I think VLK sir or Ramswamy said, it's a nice to have. Whether it is going to disrupt your business and it's going to really address a huge business problem is wait and watch. How many of us, I would still prefer to have my coffee with a piece of paper in hand or reading it online rather than someone telling me what the news is. So the use cases are still evolving, and I think to that, going back to the Twitter meme, that where was this company that was disrupting and everyone throwing money, it is already disrupted. So that is something that we are seeing. So, and we are very watchful of this segment.
All right, Vignesh, thanks. VLK, wait and watch. You as well.
No, I would tend to agree, yeah, because I think it's too early, And see, I think the exciting thing is, in many ways, you mentioned at the beginning of your talk, right? Today, English is the programming language. Okay, so, and that is the exciting part, because the moment you have the power, you believe that now you can actually solve world hunger, right? So that's what has created a lot of the excitement. And obviously, as in anything, it'll probably take 2 3 years for real use cases to really emerge, right? And today, cost of building models are very very high. So if I were a VC, and especially I'm in the B2B space, I'm not even in the B2C space. B2B space, it's going to take a long time. And I would say there's a window of opportunity for tech entrepreneurs to see how this can be integrated as part of a large corporate. If you look at most large corporates, they are not really embraced this. A lot of them have put shutters around it. If you read the press, they don't encourage chat GPT in the corporate. So how can you integrate that and get the power of it? I think there's a window of opportunity. But otherwise, I am a big fan of wait and watch on this one. So personally, I've seen too many of these revolutions. This is year 42 for me in this industry. So better to wait and watch now.
Just to add
All
to
right.
what VLK said was, the moment you hear your LPs telling you where are your generative ideas, you know that, oh my god, this is something that we should be very watchful of, because it reached a point where even they're asking you, have you found ideas in this space? So I would say wait and watch.
All right. All right.
See,
Ramaswamy, can you hear
but
us okay?
Praveen, just to
Yeah.
add, this could be a Microsoft Excel kind of moment. What I mean by that is, what Excel did was it brought the power out from the EDP department to the desktop. Your ability to, and that is definitely a game changer. And that this could be that moment. But what use cases will happen is, in initial Excel was all used for actually typing Word documents in many ways. So it is not really used for calculation beyond a point. So it happens. So I would say 2 3 years.
Sure, sure. And of course, the is clear understanding on the 10x, maybe even 20, 30x productivity that a whole lot of job roles will certainly enjoy. But you're right, VLK, because a lot of companies are still grappling with some of them, even though they're not closed, they're still unsure of the kind of use cases that will work. They're experimenting extensively, and as in a lot of different companies, a lot of these knowledge banks, knowledge bases exist. And all of that is valuable information which can be converted into a pre-trained model, and it can serve their own internal employees in multiple ways. And a lot of these B2B use cases could emerge over the next few months from now, 6 to 9 months, let's say. But Ramaswamy, I suppose you're back, and if you're able to hear us, then give a thumbs up or smile, and let us know your thoughts. How do you see the space to evolve? No, I see there are some issues. He's not able to listen to us. I guess you'll have to. I
Yeah, it's
just
not
dropped.
coming through. Sorry about
Okay,
that.
okay. That's all right. So let us know when you're
Next
hearing
time
us.
we'll have a chat GPT to represent you, Ramsam.
So we
Yeah.
can create a mid-journey avatar. Why not? Let's do that. But yeah, this was fun. So we are at the top of the hour almost. Any advice to the founders? Advice as in we've given advice, but more resources. I was meaning to ask. Any especially in terms of staying relevant. There's a lot of information being available to our disposal, and this is the mobile overload or informational overload that we are all subject to. Now, if you were to pick, let's say, one periodical, I won't say a book. I think books tend to go irrelevant over time. Some really are master classes. Classics will stay relevant, but if I mean, I'm talking of, let's say what's happening today. I want to really look at something. I want to listen to something, a podcast, maybe a thought leader that I want to subscribe into. Anything that you have, any resources, any individual that you would recommend to our startup founders that are listening in. Start with you, VLK.
Yeah, before we do that, there's a question from Dheeraj about how T-Hub can assist foreign companies in partnering with Indian companies in healthcare AI. Dheeraj, if you can reach out to me, I'll connect you with the right person in T-Hub on that.
Yes,
Okay,
thanks, VLK, for
thank you.
spotting that comment. Yes, so Dheeraj,
So,
VLK, yeah, we'll reach out to you, and even we are connected to T Hub. VLK will connect them, to T Hub, to good folks over there who can help him out.
excellent.
Um,
Coming back
but
to
since
your
you're talking
comment,
of healthcare AI, sorry, VLK, I just wanted to finish this bit to Dheeraj. So because it's healthcare AI, so we'll also want to understand where you stand, and we'll obviously look at synergies that we could bring together as T Hub and TM together. Thanks, VLK. Sorry, I didn't mean to interrupt, but your
sorry to take the point off, and I thought it important that somebody had posted a question. It will be respectful for us
first.
to respond to it if we see it. Praveen, it's a great question. While I do understand latest article, 2 minute intelligence, 2 minute learning wisdom, whatever. But I'm a big fan of actually doing some core reading. I believe that some books are timeless, and some people. There are two books I would recommend, especially for entrepreneurs. Crossing the Chasm by Moore is something I would make it it's a little hard to read, but I would make it mandatory read because that talks about a life cycle of an organization. How you look at your product at various life cycles, and that's very important. Another person is I've been following is Harari. The book, Homo sapiens. It is fantastic. It is far reaching, and I would recommend that you. I think he has a channel or whatever. Just follow that. So a big fan. It's a lot more about future thinking, and really gives you. The reason I'm saying is, end of the day, there are underlying patterns. So if there are trends, but there are underlying patterns. Okay, if you understand the underlying patterns, then the problems are easier to solve.
And might I add, with due respect, VLK, to also be able to predict what is likely to happen in the future. Sort of preparedness starts to come in some way. But
That's correct. Yeah. See, for example, Harari has a book called Homo sapiens and Homo Deus. He talks of some of things going to happen. There's a guy called Ray Kurzweil. He talked of singularity almost 25 years back. So a lot of wisdom is already there. So the question is, see, I'll just give a simple example, right? Today, everybody talks, digital. We are a digital economy. Digital. What does it mean, digital? Okay. Underlying pattern, in my opinion, is that digital means that the company is open 24/7 here. That's what it means. Okay. Earlier, it used to open at 9 and close at 5. Today, it is open 24/7. So, if you're going to be open 24/7, the way you operate is very different. Okay. So, once you understand what is 24/7 and what you have to do, everything else starts to work out. Digital is just a word.
sure. Thanks, VLK. Vignesh, why don't you go
Yeah,
first, and we'll wrap it up with Ramaswamy.
VLK sir did mention some phenomenal books. I subscribe to them. I have to read the first book he mentioned, but apart from that, the Homo sapiens are like, you watch your history to learn your future. So that's the concept that a lot of them sell. So that's a good thing. See, I would say that, so since sir has covered books, I would say that the McKinsey publication that they do on AI, right? I think that is something that if you want to see trends that are happening in the industry, that's a very good marker. I always look at what are they covering, some of the segments that are going to be the next wave. You can get a early warning. It's like early warning system where it tells you that this is going to ramp up. So that is good. And of course, I listen to a few podcasts. There's a podcast called All In, which is by David Sachs and Chamat. That's very good in terms of how AI is looking at these segments. Last but not the least, I'm a big Twitter fan. You get opinions, you get adverse and far opinions, and you get to make the decision. So it's very good. If you have that kind of mindset, Twitter is very good for you to pick up stuff on trends. That's about it.
All right, excellent. Thank you. Thanks, all of you. We are on time. Really appreciate all of you taking our time, especially our viewers, listeners. This was much fun for me to do this. And I thank VLK Vignesh and Ramaswamy for doing this with me. Any last thoughts? Very crisp thoughts, if there is anything at all you want to leave before we call it a wrap. Any of you, VLK,
So
Vignesh,
first, I want to
Ramaswamy.
I want to thank you for one thing, of course, setting this up, but getting someone who's got a lot of relevant exposure to the area. I think getting VLK sir was a master stroke. I also got to learn a lot, even in the Saturday conversation or now. So thanks for making me familiar with him, and of course, Ramaswamy and me are in the same city, so we'll possibly hook up very soon. So thanks for that.
Of
No,
course.
I think I enjoyed the conversation. Praveen, you moderated it fantastically. Great, thank you. I had a great time. More importantly, I think I want to thank all the participants. Who joined the call. Wonderful. I would just say, the only word is I would say have self-belief, guys. It'll all work out. So most important to have self-belief, and you put the arts, you'll get the results.
Thanks. We're
Yeah.
still having problems.
Thanks,
Ramaswamy,
Praveen,
you can,
for
yeah. Go ahead.
yeah.
Sorry.
Thanks, Praveen, for hosting this. Glad to be meet Lakshmikant and also Vignesh. In addition to self-belief, I would say grit. You have to grit is the key word, that you have to persevere through these tough times and have that self-belief to get through the funding winter that we spoke about. So as such, entrepreneurship is difficult, but when it's augmented and more made more complicated by external conditions, grit is the one, along with self-belief, will help founders persevere and get to better times ahead. And as you spoke about, light at the end of the tunnel, right?
Super. All of these sage advice. Thank you. And to our listeners, I would strongly recommend to follow each of these panelists. So they're doing some amazing work as a part of their organization. Please do follow them. Please also follow their organizations to know more about what lies ahead. Also, do follow us, the Telangana Mission, and let us know if there are ways in which you would want to engage with us. Thank you very much, all of you, and thank you, panelists. I wish you a very good week ahead.
Bye.
Thank you. Thank you.
Bye.